Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we are diving deep into a filing from cbdMD Incorporated that has some interesting financial maneuvers and a whole lot of preferred stock. This is a registration statement for shares of common stock that can be resolved by certain shareholders. Think of it as a company saying, hey, these people bought our preferred stock and now they want to sell the common stock they can get from it, and we are just making it official. The company is not going to see a dime from these sales. The key here is to understand why this is happening and what it means for the company and its existing shareholders. The company is cbdMD Incorporated, a North Carolina-based company known for its CBD products, specifically their cbdMD and Pure CBD brands, and they dabble in functional mushrooms and beverages too. They are listed on the Nice American under the ticker YCBD. This document is a prospectus, which is part of a registration statement. It is essentially a disclosure document for potential investors. It means the shares being registered are not yet officially offered or sold. This is the number of shares that the selling shareholders want to be able to resell. These shares come from them converting preferred stock they bought earlier. It is important to note that this does not mean they will sell all of them, or even any of them. Their stock is publicly traded. The price on the 18th of December 2025 was $1.93 per S-share. This is crucial context for understanding the value of the shares being registered. This is a technical point, but it means that anyone helping these shareholders sell the stock could be considered an underwriter, which carries certain responsibilities and liabilities. The selling shareholders have stated they do not have any pre-existing agreements to distribute these securities. Looking at the table of contents, we see standard sections like risk factors, business, and executive compensation. A big chunk here is dedicated to the private placement and the selling shareholders, which tells us where the core story lies. This section just clarifies what a prospectus is and reminds us that the information here is current as of the date on the cover, and that we should look at other incorporated documents for more details. Just a standard warning from the company that when they talk about the future, it's an educated guess and not a guarantee. Things like future financial position, liquidity, or business strategy are inherently uncertain. This is where we get the executive overview. They were formed in 2015, changed their name a few times, and are now focused on CBD and related wellness products. Their brands include cbdMD, Pure CBD, and at RX Labs, they've been working on delivering positive earnings and simplifying their capital structure. This is just their headquarters. It is good to know where they are based. Here they describe their business. They source hemp, extract cannabinoids like CBD, CBG, and CBN, and highlight their broad spectrum and full spectrum products. They also mention beverages and functional mushrooms. Their mission is to enhance quality of life and bring awareness to effective products. This is where things get interesting. In 2025, they focused on earnings and simplifying their capital structure. They managed to maintain their revenue base and reduce their operating loss. They also had a crucial shareholder vote to convert series of preferred stock and dividends, which helped them comply with Nice American listing standards. They are reporting they maintained revenue and reduced their GAAP operating loss from $3.3 million in fiscal 2024 to $2.1 million in fiscal 2025. This is a positive sign showing some improvement in their financial performance. They also launched their Oasis brand into the hemp-derived category. This part is really important. Cleaning up their capital structure, especially converting preferred stock debt into common stock, is a big move. It helped them regain compliance with Nice American listing requirements. This means they avoided being delisted, which is always a good day for shareholders. This is a significant development. They entered into an agreement to potentially sell up to $20 million of common stock. This shows they are actively seeking capital. Here is another capital raise, this time through preferred stock. They sold 1 million shares of Series C convertible preferred stock for $2.25 million. This preferred stock can be converted into common stock later. This details the core of the offering. On the 29th of September 2025, they sold 1.7 million shares of Series B convertible preferred stock for $1.7 million. This is where the shares being registered in this prospectus originate from. Standard language meaning the money will go towards keeping the lights on and general business operations. This tells us how much common stock they get if they convert. At $1 per S-share, 1.7 million preferred shares could become 1.7 million common shares, but there is a floor of $0.5, meaning if the common stock price drops really low, they can convert at that lower price, potentially leading to more shares being issued and more dilution. So not only can they convert the principal, but they also receive dividends. These dividends are paid in common stock unless certain conditions aren't met, in which case they are paid in cash. This could lead to even more shares being issued over time. This section reiterates that this prospectus prospectus is for the resale of up to 1.7 million shares of common stock by the selling shareholders. Again, no proceeds to the company from these specific resales. Scroll common stock offered by the selling shareholders up to 170000 shares of our common stock. Assuming full conversion of the Series B preferred stock at a conversion price equal to $1 per S-share. Scroll, this is a direct statement of the maximum shares being registered for resale. Scroll common stock outstanding immediately prior to this offering 8959410 shares. Scroll, this gives us a baseline number of shares before these potential resales. Scroll common stock outstanding immediately following this offering 106599410 shares, assuming full conversion of the Series B preferred stock at a conversion price equal to $1 per S-share. Scroll, this shows the potential dilution if all the Series B preferred stock is converted and these shares are sold. It's an increase of about 18%. This is always a crucial section. They remind investors to read thoroughly. This is a significant risk that they have faced before and are still mindful of. Staying listed is critical for liquidity and investor confidence. They are giving themselves flexibility with the money raised from preferred stock sales, which is standard but always a risk for investors who lack control over how the funds are used. This is the big one for existing shareholders. All these conversion rights and options mean more shares entering the market, which can lower the value of each existing share if the company's overall value does not increase proportionally. This section goes into more detail about the Series B preferred stock deal. This reiterates the details of the Series B sale. It is a direct exchange of cash for preferred stock. This is the conversion mechanism. They can convert at $1 per S-share. This is a full ratchet anti-dilution provision. If they sell stock cheaper than the preferred conversion price, the preferred conversion price drops to match that lower price. This can cause significant dilution if the company has to issue more shares to the preferred holders to compensate for selling stock at a discount. The 10% annual dividend paid in stock can also increase dilution. This is a critical protection for shareholders. If the conversion would result in issuing 20% or more of the outstanding shares, they need shareholder approval. This cap helps prevent massive, immediate dilution without a say from the existing owners. Again, emphasizing the company gets no proceeds from the resale. The proceeds from the Series B preferred stock itself were for working capital. Recap of their stock listing and price. This section lists the parties who will be reselling the shares. This is one of the main entities that will be reselling. They own a significant number of shares. Scroll number of shares of common stock owned prior to offering 497,854. Scroll, this is what they own currently. Scroll maximum number of shares of common stock to be offered pursuant to this prospectus 1020000. Scroll, this is the maximum they could offer. Note this is a lot more than they currently own, indicating it is based on their preferred stock conversion rights. Scroll EVP Emerging Manager Onshore Fund. LLC Arbitrage Series 299,733 Scroll. This is another selling shareholder. This describes how the selling shareholders will sell their shares. They can sell directly through brokers in block trades or at the market. This suggests they will use a formal distribution channel, likely aimed at the public market through broker-dealers. This section is usually a great place to find how management views their own performance. However, in this filing, it is directly incorporated by reference from their 10K. This means we would need to look at that separate filing for the detailed discussion of their financials. Similar to the MDWA, the business description is also incorporated by reference from their 10K. This details the different types of stock the company has. They have a lot of authorized stock, which gives them flexibility to issue more shares in the future if needed. This is the stock related to this filing. It is convertible into common stock. In case the company goes belly up, these preferred shareholders get paid before common shareholders. They also have Series C preferred stock issued in December 2025, which also has similar conversion and dividend features. This means there are other groups of preferred shareholders with similar rights. This section, like others, refers back to the 10K for details, so we won't find new material information here. Again, details are in the 10. This information is incorporated by reference from their proxy statement. This section details compensation for top executives. Scroll name and principal position, Ronan Kennedy, CEO and CFO year 2025 salary. $275,000 twin Scroll T, Ronan Kennedy. The CEO and CFO has a base salary of $275,000 in 2025. plus a $25,000 bonus. T. Ronan Kennedy has a new agreement from November 2025. Scroll term 3 years with the option of extending for additional automatic one. Year terms unless either party provides written notice of non-renewal at least 60 days before expiration of the initial term or renewal term. With automatic 1-year extensions. This shows stability in their top leadership. Scroll annual base salary $340,000, an increase of $65,000 from his initial annual base salary. Scroll his salary has increased to $340,000. Scroll restricted stock awards and stock options. As additional compensation on the effective date of the agreement we granted him, a restricted stock award of an aggregate of 445,000 shares of common stock vesting subject to approval of the 2025 plan. Scroll he also received a substantial restricted stock award. This is a direct incentive tied to the company's success and stock value. Scroll change of control. If the Kennedy employment agreement is terminated not for cause within 2 years of a change of control of cbdMD, as defined in the agreement, or in the 90 days prior to a change of control, we are obligated to pay Mr. Kennedy an amount equal to the greater of I-1.5 multiplied by his then base salary, or the base salary remaining to be paid during the then current term of the agreement, payable in a lump sum payment on the termination date. Scroll, this is a golden parachute clause. If the company is bought out and he is not terminated for cause, he gets a significant payout. This can sometimes encourage executives to be more open to acquisition discussions. This section, like others, points to external documents. Again, cross-reference to another filing. The validity of the securities will be looked over by Gavigan Law, PLC. Cherry Bicate LLP, an independent registered public accounting firm, audited their financial statements. They also included a note about the company's ability to continue as a going concern. This is a standard disclaimer, but it is worth noting. This tells you where to find more documents about the company, like their annual and quarterly reports. This is a common SEC practice. Instead of reprinting everything, they include by reference previous filings. This means a lot of the details about their financials and business operations are in other documents, like their 10K Scroll annual report on Form 10K for fiscal year ended the 30th of September. 2025 filed with the CC on the 19th of December, 2025. Scroll, this is a critical document that contains their full audited financial statements for the past fiscal year. Scroll current reports on Form 8, including AT, are filed on the 25th of November, 2025. The 28th of November, 2025, and the 8th of December, 2025 scroll these filed reports. Cover recent events. Now we are in the part of the filing that includes additional information not required in the main prospectus. This table shows the cost the company expects to incur for this registration. Scroll SEC registration fees $185.47. Scroll. The SEC registration fee is very small. Scroll legal fees and expenses $275,000. Scroll legal fees are the largest chunk, as expected for such filings. This section outlines how the company will protect its directors and officers from certain lawsuits, which is standard practice in corporate law. It essentially says that if a director or officer acts in good faith and in the best interest of the company, they will be protected from liability with some exceptions. This refers to past sales of securities that were not registered with the SEC. This is an index of all the legal documents and contracts attached to this registration statement. These are promises the company makes to the SEC, like agreeing to file certain amendments or updates. This is a detailed list of all the exhibits filed with the registration statement. It includes various agreements, plans, and legal documents that form the foundation of the company's operations and its relationship with its investors. This shows a previous underwriting agreement, which is relevant to how they've handled stock offerings in the past. This is a key exhibit representing the agreement under which the Series B preferred stock was sold. This is where the company's officers and directors officially sign off on the document, indicating they've reviewed it and agree with its contents. T. Ronan Kennedy, the CEO and CFO, signs off as the principal executive and financial officer. The directors and officers also sign acknowledging their responsibility for the filing. Now, let's talk about what this all means for cbdMD Incorporated. The company is clearly in a phase of financial restructuring and capital raising. They've issued Series B and Series C preferred stock, and now they are registering the resale of common stock that can be converted from that Series B preferred. This is a common move, but it signals a few things. First, the company is relying on preferred stock issuances to fund its operations and manage its capital structure. The fact that they are converting preferred stock into common stock and registering the resale of those shares shows a proactive effort to bring their capital structure in line with exchange listing rules. This is good for avoiding delisting, but it also means more dilution for existing common shareholders. The anti-dilution clauses, especially the full ratchet provision and the dividends paid in stock, can be particularly concerning for common shareholders if the stock price remains low. The company has reduced its operating losses, which is a positive trend. However, the reliance on preferred stock sales and the potential for significant dilution are risks that investors need to carefully consider. The increasing number of shares that can be outstanding, especially with the Series C preferred and the ALOC agreement mentioned, means that the value of each existing share could be spread thinner. The employment agreement for the CEO T. Ronan Kennedy shows a commitment to leadership stability with a decent salary increase and a substantial stock award. The golden parachute clause is standard but highlights the possibility of an acquisition. Overall, cbdMD Incorporated appears to be navigating a challenging financial landscape, focusing on regulatory compliance, capital generation through preferred stock, and managing dilution. The key going forward will be their ability to grow revenue and profitability in a way that outpaces the dilutive effects of their financing activities. Investors should pay close attention to how effectively they deploy the capital raised and whether the business can generate sufficient returns to offset the increased share count. Alright, that is our deep dive into cbdMD Incorporated's latest filing. What is your take on their strategy and the potential impact on shareholders? Drop your thoughts in the comments below. If this analysis was helpful, please hit that like button and subscribe for more corporate deep dives like this. Don't forget to check out our Discord community in the description as well. Thanks for watching, and we'll see you next time on Corporate Decoder.